You think running a trading platform requires a $25 million prime broker license and a compliance army. But real operators rent white-label infrastructure and capture up to 70% of spread markups paid directly in crypto. While you spend 15 days waiting for a $50 Swift wire from a legacy broker, platform owners extract automated cash flow without taking a single trade. Let us destroy the foundational delusion right now. You do not need regulatory approval in 7 jurisdictions, nor do you need $10 million in liquidity reserves to own a financial toll bridge. The retail herd spends 10 hours a day staring at candlestick charts, risking their capital against algorithmic market makers. They are buying lottery tickets. The platform owner sells the paper. To understand how this works, you must understand assets, things you own that put money in your pocket or grow in value, such as rental real estate, shares in a business, or a custom trading bridge. When you own the platform, every single order executed by your audience passes through your digital pipes, generating instant risk-free revenue regardless of whether the market goes up or down. Retail traders focus on win rates. Operators focus on volume flow and spread markups. If you do not own the execution software, you are simply unpaid marketing for someone else's balance sheet. Let us break down the exact mechanical steps required to launch, monetize, and scale a global trading platform today. In traditional fintech, launching a broker required purchasing white-label infrastructure software built by an external engineering company that you brand and operate under your own corporate identity. Legacy turnkey technology, providers such as B2 Broker or MatchTrade Technologies, charge a upfront setup fee of $5,000 and an ongoing monthly maintenance fee of $2,000. Those systems connect to a liquidity provider, an institutional entity that supplies buy and sell quotes to execute client transactions in real time. Under the hood, brokers choose between A-book execution routing trader orders directly to external market liquidity pools and B-book execution, where the broker takes the opposite side of the client's position internally. Instead of managing B-book warehouse risk or burning thousands on server hosting, modern operators use platform architecture engineered directly on top of established brokerage engines like Deriv. With VARJIX, an operator launches a complete, customized trading platform in about 30 seconds without writing a single line of code or paying setup fees. VARJIX is completely free. There is no subscription, no monthly fee, and no hidden pricing tiers. You do not pay $2,000 a month just to keep the lights on. The primary monetization lever is a spread markup, adding a fee to the difference between the buying and selling price of an asset, similar to adding a 10-cent surcharge to a gallon of gas. When a trader opens a position on your platform, a 3% markup is applied to the stake of each real trade by the underlying broker. That 3% markup is divided by a fixed, universal revenue share. The operator always retains 60% of the markup, while VARJIX keeps 40%. This 60/40 split is absolute across every tier. Nobody keeps 100%, and no operator pays higher percentages for custom access. Look at the real numbers. If an active community of 5,000 traders generates $1.2 million in monthly trade volume, a white-label operator with traditional software overhead might pocket $50,000 after paying $15,000 in monthly server fees. On VARJIX, because your monthly infrastructure cost is $0, every dollar of your 60% markup share goes straight to your bottom line. You choose your brand identity using turnkey front-end templates like Velocity or Solo Trading Elite, giving your users an institutional-grade interface. Every operator platform automatically includes a risk-free sandbox environment located at your custom slug.varjix.com/sandbox. This sandbox operates connected to the client's Deriv demo account using real market data and practice funds, allowing you to train new traders without risking real capital. Keep in mind, practice activity never generates revenue for anyone. Money is made exclusively when real positions are entered. You are also provided an AI growth copilot agent, an open public API, and an MCP server integration to automate your platform management. While retail traders waste their lives drawing imaginary trend lines on charts, you are building an automated cash flow machine. Now let us examine the critical operational friction point that kills most brokerage businesses: the legacy fiat banking bottleneck. Traditional international finance runs on swift wire fees, heavy charges imposed by the Society for Worldwide Interbank Financial Telecommunication, the legacy messaging network that moves money between global banks. When a partner in a developing market earns $40 in platform commissions, paying a $35 SWIFT fee plus intermediary bank deductions leaves them with practically nothing. To cover wire processing costs, legacy brokers impose $500 million minimum withdrawal thresholds and delay payments with multi-day manual compliance checks.
If a bank employee has to click approve for you to receive your platform profits, you do not own a software business, you own a fragile job with a corporate gatekeeper.
Here is how the VARJIX payout schedule operates. Monthly earnings accrue from the first day to the last day of each calendar month. The closed month is settled between day 12 and day 18 of the following month. There is no daily or weekly settlement option available. Starting in the August 2026 cycle onward, settlement is routed automatically on-chain directly to each operator's BEP20 wallet. BEP20 is the token standard on the BNB Smart Chain, engineered for automated, low-cost smart contract transactions. Payouts are made in UST on the BEP20 network straight into your non-custodial wallet, a digital vault where you control private keys directly without relying on a central bank. Under this automated system, you do not submit a withdrawal request, and no platform administrator manually reviews your payout. The full balance is transferred with zero withdrawal fees deducted from your earned share. Furthermore, the minimum payout threshold drops from legacy banking limits down to 1 single cent. Previously, operators had to request payouts manually and pay network gas plus a percentage processing fee, making small balances uneconomical to harvest. Trader deposits remain entirely on TRC20 Tron rails, ensuring fast client funding, while payout settlement runs cleanly on BEP20. By automating settlement via smart contracts, VARJIX eliminates an estimated $450,000 in monthly network banking, overhead, and wire friction. Manual bank withdrawals remain available if requested, but they retain traditional fees and processing delays. Smart operators do not wait 5 business days for a bank compliance officer to review their earnings. They let smart contracts settle their ledger automatically. Now, let us examine how zero-friction payouts allow you to scale an international distribution network. In traditional brokerage distribution, platforms expand by recruiting and introducing broker and intermediary who brings trading clients to a platform in exchange for a piece of transaction revenue. When minimum payouts are high, small affiliates in emerging markets like LATAM, Africa, and Southeast Asia are completely priced out. When you lower the minimum settlement threshold to 1 cent with zero fees, micro creators can monetize immediately, driving massive long-tail trading volume. VARJIX provides a 2-level referral framework. Level 1 pays you 10% on direct referrals, and Level 2 pays 5% on secondary referrals. This structural change resulted in a documented 300% surge in partner acquisition across low-capital regions. Look at industry history. Institutional retail broker XNES grew to over $3 trillion in monthly trading volume by giving regional partners instant, zero-fee crypto settlements. They did not scale by giving away free t-shirts. They scaled by stripping friction out of partner money movement. When you give your distribution network automated payouts, they bring you their volume instead of giving it to legacy institutions. You are building a permanent digital infrastructure asset that collects toll revenue on global financial flow every minute of the day. Remember the fundamental law of wealth. Fortunes are made by building infrastructure, not by taking leverage on charts. Leverage is using borrowed capital to increase position size, like buying a $100,000 index position with only $5,000 off your own equity, where a small drop triggers a margin call. Why expose your family's financial future to liquidation risks when you can collect spread markups on every trade executed by thousands of users? If human intermediaries stand between you and your monthly earnings, you remain vulnerable to banking platform holds. I know your excuse right now. My audience prefers traditional bank wires, and I don't know how to manage corporate funds in crypto wallets. Stop hiding behind legacy banking friction. Your traders use digital rails every day, and learning how to set up a non-custodial address takes less than 3 minutes. Here is your specific assignment for today. You will complete this before 5:00 p.m. Step 1. Download a non-custodial mobile application like Trust Wallet or SafePal, and create a dedicated BEP20 receiving wallet specifically for platform revenue. Step 2. Log into your VARJIX operator control panel, navigate directly to payout settings, and paste your BEP20 address into the payout field. Step 3. Confirm your wallet address to ensure the upcoming monthly settlement cycle routes 100% of your earned 60% markup, shared directly to your wallet without fees. Stop trading your time for basis points. Own the casino, automate the vault, and let the blockchain pay you. Subscribe to VARJIX right now to master the next layer of fintech platform infrastructure.